you know what? We're definitely not macro experts, and I don't really ever plan to be. What I can say is it's good to be aware of the macro, especially when you're in these very noisy, volatile environments. But what I've found to be a lot more helpful is technicals and understanding what the price action is telling me. I think that's been the key. I mean, it really is guiding me through this process. And so I think that's something that I've really honed my skills on because dude, there's so much information in the buying patterns, and that's what the candles are showing you. And if you look at the volume, if you look at the recoveries, if you look at the bounces, if you look at, you know, the specific type of candles, I mean, it has a lot of information that it's telling you. So I will say that like looking at the technicals has really helped me understand like risk appetite, what's happening in the market, and navigating this stuff. So I think that is good, and like just studying as many charts as you can.
I agree with you that on a short term basis, not a long term basis, a short term basis could be anywhere from 1 day, 1 hour to maybe 2 or 3 months or even 4 months, right? Positioning and sentiment is really all that matters in that short term. But on a long term basis, a great business will yield great results and outperform the market usually. Depends on the secular trend. But you're right. And you said this before when we were texting each other. This is a trader's market. This is not a market that is built for investors because of the fact that price action is moving so much and it's caused by fundamental changes in the economy. Okay, but now, if you ask me, that is off the table. The fundamental changes in the economy are going to be impacted by supply chains from China, but not to the magnitude of the other 40 countries around the entire, or 70 countries, I don't know how many countries around the entire world, hit with 10% tariffs across the board.